Markets have been trading on a pessimistic note for the third week in a row. The aggressive measures taken by global central banks to tackle rising inflation put pressure on stocks. Find out more about how the situation has changed in the foreign exchange, crypto and commodities markets. Investors and even the Fed officials voice concerns that the US economy is on the verge of a recession. Against the backdrop, investors flee to safe haven assets, and the US dollar is the main beneficiary here. The US dollar index, which measures its value against the basket of 6 major currencies, consolidated near the level of 105 at the close of the week. Besides, the US currency got support from a rate hike of 75 basis points, which is the highest increase since 1994. Initially, the risk sentiment was on after the Fed meeting, which helped the euro recover after a previous plunge to a 5-year low of 1.0350. However, in the long run, the euro is still under pressure as the European Central Bank avoids serious changes and is not ready to take aggressive steps like other central banks. Besides, the debt crisis in the southern European countries has come up again. Meanwhile, the UK Monetary Policy Committee followed the hawkish lead of the US Central Bank. On Thursday, the UK regulator raised the rate for the 5th time in a row, but the increase was moderate, of only 25 basis points. In the middle of the previous trading week, the pound-dollar pair was holding near the 2-year low. Today, the downtrend still persists. Inflation in the UK is running at 41-year high and may reach the double-digit reading as soon as the third quarter this year. This factor definitely intensifies the fears of a recession. Bitcoin buyers also faced losses. On Friday, the price of the number one cryptocurrency declined to $19,000 per token, its lowest level since November 2020. As a result, the digital currency tumbled by 30% last week. Crypto traders are worried that one of the largest crypto exchanges, Celsius Network, has temporarily blocked the withdrawal of funds and transfers between accounts. The US Securities and Exchange Commission has launched an investigation on the issue. Meanwhile, the BTC quote is falling and dragging other altcoins with it. In the oil market, the sentiment is also low. The risk of recession and another global economic crisis makes the outlook for energy demand very pessimistic. On Wednesday, the International Energy Agency warned that soaring oil prices and downgraded forecasts darken the future of crude demand. At the same time, there is hope that crude prices may recover and head for new highs. Investors are closely watching the possibility of a supply deficit after the US announced new sanctions against Iran. This news contributed to worries over a supply shortage among the OPEC members and distributions caused by the unrest in Libya and the conflict in Ukraine. The anti-risk sentiment is growing, but gold is no longer the favorite of investors. Over the weeks, the precious metal lost almost 2%. As major central banks raise their rates, money flows to the US dollar and treasury bills. At the close of the session on Friday, gold was trading at $1,840 per troy ounce.